Hello and welcome to the open chapter of the Momentum Indicators Master Guides. I'm glad you've chosen it, not least because momentum indicators are my favorite indicators, and I also think if you're looking at swing trading or trend following in relatively short periods of time, you can't do it without understanding momentum indicators. And similarly, there's no point looking at momentum indicators if you don't understand swing trading and trend following. So we'll look at some of those aspects as well. But momentum indicators, when you look at these, and I'm going to focus on three in particular, though we're going to look at other techniques throughout these CDs, the MACD, or moving average convergence divergence, stochastics, and RSI. I know they sound absolutely awful and unfriendly, but trust me, they are friendly. When you look at these, the reason we're looking at them is because we really are drilling down to a level of detail that you need to have if you're going to try to make money from the markets. You really can't just rely on, well, I know a little bit about price earnings ratios, I know a little bit about how to draw trend lines and support and resistances, maybe that's all I need. I assure you it's not. It's when you start getting into this level of expertise that you know that you're getting close to arriving and having enough knowledge to actually tackle the markets with confidence. Okay, so let's kick off. Now what I do with all the CDs is first of all explain to people what it is that is our ultimate trader vision and mission here, and it always comes down to the 3 M's. And those are method, money, and mind. Essentially, where do we want to be? What do we want to be? We got to have, as traders, a vision statement. We want to be able to make money without stress. We want to be able to be in control and disciplined over our emotions. We need to have a methodology to enable us to do that. So how are we going to get there? Well, the main way in which we get there is by focusing on these 3 M's. We need to understand money management. How do we decide how much money to put into a trade? When do we decide when to get out? Based on rules from the trading professionals, which I'll give you. Mind, we need to understand. Trader psychology. Ever felt that the market's going right against you? Ever got into something where your indicator suggested getting in and immediately it moved the other way? So you thought, wait a minute, why don't I just become a contrarian indicator? Why don't I become a one-man contrarian indicator? Everything I buy, I can tell people I bought it so they can sell and do the exact opposite. Well, that's actually got less to do with your indicators and more to do with trading psychology. And methodology, the actual picking. Now, obviously, this CD is very much more focused on this than either of these two. These are covered in other CDs in far more detail. However, we will touch upon both of these so you do get a full education in any event, of course. Okay, lots to cover, so let's catch on. What does actually happen when we do have that complete trader vision and mission? When we do have the 3 M's, when we have money management, when we have the trading system, when we have mind in order, so that we've got that in the middle? Well, we get profits. That's what happens. That's the whole aim of it. Combine all those, that's where you get to. Fair enough? Okay. I know I'm moving at a rapid pace. That's because we've got a lot of information and I don't want to focus on the broad stuff too much because we'll touch upon it over and over again. Why momentum? After all, that's why we're here. Why are we looking at momentum? Well, let me tell you why we're looking at it. First of all, the indicators that we're looking at, we're trying to find, and here's the FTSE, we're trying to find a leading indicator. That's what momentum is about. Momentum indicators are trying to anticipate a market turn. So for instance, around here, they're trying to tell us that the market is about to turn before it actually does, as it's done here. Whereas other indicators like the moving averages, they're lagging indicators. They only start telling you something after it's already happened. Similarly with this, we're supposed to be getting a lead in before the market actually starts moving. That's why we look at momentum indicators. Now I'll explain in far greater detail, of course, as we go through how actually they're leading, what the rules are for interpretation, so that we do actually read the correct leads. And of course sometimes you might think you've got an indication and you haven't. Well, that's down to reading properly. Sometimes, because these aren't 100% accurate, they're right about 7 times out of 10, it might just get you into a trade that is going to be wrong, in which case we need to have good money management to make sure we've got a narrow stop loss and we get the hell out of there very quickly. Yeah? But that comes later. What we're trying to answer here first is leading indicator and what it means. By the way, virtually all of you will be advanced, but just in case you're not, bar charts, if you're not familiar with it, each one of these bars represents a day. That's the low for the day, that's the high for the day. This horizontal line coming out to the right represents the closing price. The horizontal line going in from the left represents the opening. So for instance on here, well, let's take this one. That's the closing price, that's the high, that's the low, and that's the opening. So, and that was on that particular day. So in one day you've got 4 pieces of information: open, high, low, close. Yep, very straightforward. So why do we want to look at momentum? Well, again, just to reinforce the obvious so that we've got a good grounding before we get into some of the detail. A, we want to anticipate either when to get out of a stock. So for instance, it's been going up and up and up, it's now slowing down. And sometimes you can't do that by simply looking at prices, because sometimes you don't know whether it's actually slowing down but is going to continue upwards, and a momentum indicator should be able to tell you that it's slowing down but likely to continue upwards, or whether it's slowing down before a turn. Now that might be because either you want to exit or you want to go short, because you might be a spread better, CFD trader, futures trader, whatever. So you need to know whether it's slowing down, and similarly this way as well. Equally, you need to know when you're undecided whether you should continue holding it, whether as the stock is going, say, sideways, no, it's still got potential. So the reasons we look at momentum is, as I say, relatively short-term trading, to know when to get in, when to get out, when to hold, when to fold them, as the song goes. But most importantly of all, they're leading indicators. Now, what we need to know with these, before we see lots of example trades, we need to be able to interpret them. And guess what? You can't just interpret them the way the textbooks do. Well, because if you could, then the textbooks guys would be all running hedge funds. No, you've got to interpret them through proprietary techniques, techniques which professional traders have learnt actually work, as opposed to people who just talk academically. And that's supposed to be one of the benefits of these CDs, that it's not just the educational part, you've actually got the practical part and practitioners. So as I go through this, I'm going to go through some rules of interpretation which you won't find in the textbooks, which you will find from professional traders. But for now, as I try and keep every chapter to about 5 minutes each, for now we're going to pause and move on to the next chapter.